people understand there's a tremendous amount of embedded information available in all of the option market prices that we see every day, compared to the VIX, which is a tremendous amount of information by itself, but it's only one number and it only tells you information about one point in time. Whereas the entire complex of option prices, it tells you multiple time horizons, specific information of probability of different outcomes, different areas of price ranges. And people often talk about volatility, and that's really the key focus that we all think about. That's our intuition. And with volatility, I can imagine different probability distributions and different risk profiles that share the same volatility, yet have very different characteristics, very different possible outcomes and risk exposures that you can actually contemplate. So it's really just the tip of the iceberg, what most people think about. It's available in option prices, and my hope is that they'll be able to see that there are ways to get more precise and exacting information out of options markets than we're used to doing. It shows, the data shows a lot of the same things that our intuition tells us it should. It shows that distributions have fat tails, so that means that very large surprises are possible, both to the upside and to the downside, of course. It shows us that distributions have negative skew like we'd anticipate. So a lot of the stylistic things. It also shows us that when volatility and risks go higher, that the distributions widen out, of course, but our intuition about what happens to skew, whether it falls high or low, it all plays out in the distribution. So it doesn't really tell us qualitatively that much different, but it does tell us some additional things that we're not used to. For example, when Brexit was coming up on the horizon, you could see a lump of risk out in the term structure, and you could see almost a bimodality in the distribution because it was a digital outcome. Brexit, yes or no. And so you can see two different price points sort of showing up in the structure of the market there. In recent years, there's been a lot of talk and a lot of action on volatility selling. It's a risk premium, and many people try to harvest, and you can very often see probability distributions being squished down, really right in the middle, right when people start to sell near term at the money vol, for example, you can see that signal in the probability distribution getting pushed down there. So it not only is an information about risks that you can extract from it, but potentially we'll have the opportunity to see some of market positioning or supply and demand that would be available in the market. So this is my first time at RMC, and it's been a great experience, and I really appreciate the opportunity to be here. There's a tremendous amount of content that I've seen, a very high quality. I think the options markets are really developing very strongly, and they're moving more and more towards exchange traded, and the barriers to trading options have just been brought down, and I think Cboe has been a tremendous venue for us, and this is a great opportunity. I'm learning a lot more about some of the use cases and some of the different products on offer and different ways they can be used.